Brad Williams, Frugal Finance, Investing in Risk. Do you really understand risk tolerance? I'm going to discuss a little bit about risk and return. You probably know that investing involves risks. Different investment products and strategies involve different degrees of risk. Generally, the higher the expected returns of a product or strategy, the greater the risk that you could lose most or all of your investment. So, what level of risk is too much? This isn't a simple question, and there's no right answer. It all depends on your risk tolerance, the amount of investment risk you're willing and able to accept, which is impacted by a variety of factors and is unique to you. Risk tolerance factors? Here are 4 factors to consider when evaluating your risk tolerance level. Investment objectives. What are your objectives for this account? Investments that have the potential for significant growth also come with a higher risk of significant losses. On the other hand, if your objective is preservation of capital or protecting the assets in your portfolio, you might choose investments that involve lower risks, but also might not result in the growth or income you require. Your investment objective should reflect your needs and desired outcome, as well as the risks you're willing and able to take to meet your goals. Investment time horizon? If you're looking at a long-term investment. For example, if you're in your 20s and planning for retirement, you can probably afford to take on more risk. You have decades to make up for losses your account might sustain. If your timeline is short, however, you likely don't want to risk your account value seeing a significant decrease as it's time for you to withdraw. You might want to consider the liquidity of your investment in tandem when you expect to need funds. Reliance upon the invested funds? Are you counting on this money to provide you with essential funds, either now or in the future? For example, is the main source of money for a home down payment or your child's college education? Or is this disposable income that won't really impact your lifestyle if you take losses? When assessing whether this really is money you can truly afford to lose, consider your financial circumstances and needs. Not only what you earn and your overall net worth, but also your short and long-term spending requirements. This might include routine expenses, housing, food, transportation, utilities, childcare, periodic or emergency expenses, home, car repair, medical care, or potential long-term expenses, buying a car or a house, paying for college, paying for long-term care. As you assess how best to generate the returns needed to meet your goals, keep in mind how dependent you are on these funds. In addition to where you are in your investment timeline, and choose your investments and investing strategy accordingly. Inherent personality? Probably have some idea as to whether you're generally a cautious person or more of a risk taker. The amount of risk you can technically afford to take isn't necessarily the same as the amount of risk you're comfortable taking. You don't want this to outweigh logic in your investment decisions, but it's something to consider. If the idea of losing money makes you squeamish, you probably don't want to pick the highest risking investments. You might be more likely to back out early if you face volatility, which could mean missing out on the potential profits. Why risk tolerance matters? Once you know your risk tolerance, you can use that to inform your investing decisions. Investments should be chosen based on your objectives, needs, time horizons, and tolerance for market changes. Remember, your risk tolerance is personal. It's important to make decisions that are right for you, not for a friend, family member, or social media influencer. Even if you trust their advice, you're working with a financial professional, clearly communicate your risk tolerance to them. Even if you feel comfortable taking on a significant amount of risk, you should still be thoughtful about your investment decisions and how they fit your financial profile. Being willing and able to take on certain amounts of risk are 2 different things. Make sure the risk you're willing to take is consistent with the level of risk you're actually able to take. Never invest in an investment product you don't fully understand, including what risks are involved. And be aware that guaranteed investment returns, high-pressure sell tactics, and promises of low risk can be hallmarks of investment fraud. Though it doesn't ensure a profit or guarantee against loss, diversifying your portfolio is a smart strategy to manage your risk exposure no matter what your risk tolerance is. To diversify your portfolio, you'll want to select investment products from different asset classes, stocks and bonds, as well as different types of investments within those asset classes. Stocks of companies from different sizes or industries, or broad-based index funds. Then you'll want to make sure your portfolio evolves along with your circumstances. Check in with your assets and yourself periodically, confirm whether the two are still aligned. You'll likely want to rebalance your portfolio and adjust your strategy over time. While there's no such thing as risk-free investments, paying attention to your risk tolerance can help you make investment decisions based on the risk level that's right for you. Day traders, you love that high. You get that endorphin deal, but you know there's an extreme high level of risk. You walk into a casino, you're going to get that endorphin high, and you're overlooking that risk. You know the odds are against you, still go about trying to double or triple your money. Buying stock options. 80% of people who buy calls are going to lose money. It's a statistical fact. But you go about doing it and you continue to do that. Well, there's always that gut check. It's fun until it's no longer fun. That's the level of risk. If you can't sleep at night based on your investment decisions, then change your risk tolerance. Stop doing the things that are causing you to sleep uneasily. That's just the gut check method of risk tolerance. Comment, let me know your level of risk tolerance. If you're day traders, why do you do it? Are you successful long term? I'm not talking somebody who's been doing it for a year. If you're 5 years into day trading, that's a pretty good sign that you know what you're doing. So pass on the secrets. Brad Williams, Frugal Finance. Hope that helped. Thanks for watching. See you soon.